Alright guys, thanks for joining me in this market update, or really just what we call an individual trade analysis update. What I'd like to do for you anyway is just go through a couple of watch lists which I have predefined, and we'll just go through and talk about any individual trades which look to be setting up nicely for the week ahead leading into Monday's trading session, which is going to be the 24th of March 2014. So what we have here is Berkshire Hathaway. Berkshire Hathaway has broken out recently, and it seems to be moving into what we call a new bullish trend. You can see our old entries here, 119 and a first target at 123.76. Is this something that I want to jump into at the moment based off these exponential moving averages? The answer is probably no. The reason why is because we're quite a way away from both the 10, also the 20, and definitely the 50. Although there is definitely a trend in effect, if you're buying up around this level about 126, it's probably too much risk on the table, especially once price breaks above this until your next support level, or at least that intermediate swing low, which is going to be down here about 122. So with Berkshire Hathaway, expect it to at least move sideways in a little bit of a tight sort of pennant, maybe a wedge, perhaps even some form of bull flag. We'll soon see, but at the moment it's not something that I'm looking at trading bullish. CHK appears to be breaking down, which is interesting. Really nice to see. We did have a trigger set up here at 24.67. A little bit of a hammer candlestick, but on Friday again, we got that bearish counter attack. At a break even on this trade at the moment, we do have targets down here about $23.90 a share. So keep up to date with CHK. You could get a very quick day trading move down to that support level. Once we get down here, we'll probably stabilize and simply just trade sideways until we get that next bounce higher. CNX is looking quite healthy at the moment. If I just bring this into perspective for you, you can see we're jumping all around support and resistance lines. We've broken out, we've come back down, we've retested old resistance a couple of times as new support. Let me just bring up the right color for you, use blue. As new support, and we're starting to get a bounce. There's a nice volume spike coming in to CNX as well. So we've got this bullish trade set up at 41.54. Let me just consult with the ADX and the CCI. These are fantastic trending indicators. And the ADX has turned up, which is saying it likes this bullish move. Happy face. And the CCI is breaking above that signal line. So all we really need at the moment now is for price to move above $41.54 to start looking at bullish trades, either calls or just actually owning stock in CNX, up to our next target up here, about $45 a share. So let me just duplicate this and turn it to orange. Bam. Orange is the trigger. There we go. That's CNX. At the moment, there's no bearish setup. Other than, let me just rephrase that, there is a bearish setup on CNX, but it's not until we break down below $38 a share. So that is the trade setup on CNX. Be interesting to see which way that moves this week. CSIQ, which is Canadian Solar, again, a really nice bidirectional trade below 31.12 bearish down to $26, or above 37.37 up to resistance up here, about $43 a share. So again, let me just duplicate this, drag it up and change it to orange, because this is definitely going to be a nice little target on CSIQ. Let me just go through some additional steps to analysis. We're sitting right on that 10, 20, and 50. This could be a bearish cross, and we could find some selling pressure coming in at this level. Simples are very bullish. That's why we have this bearish trigger set up at 31.12 to catch the bearish breakdown. Everything's nice and well there, and we could also bounce. That's why we have that 37.37 trigger as well. As you can see, we're very oversold on CSIQ, so we could expect that natural oscillation higher. But having said that, we do have a fair bit of bearish divergence between price. So this could be what we call a terminal reversal pattern, setting up on CSIQ, or at least some form of a channel which is going to set up and really trade probably into earnings back in May 2014 or into May 2014. So it'll be interesting to see which way that has gone. DE, we did catch this bullish swing higher. I think we did get whipsawed up here, but we've just simply come down and we've just retested old resistance as new support, and that trend is continuing. At the moment, it's not something that I'm jumping into just because the risk reward is grossly unjustified. So DE is something which is off the table this week. FSLR, what an amazing breakout last week. Again, we had a 52.14 bearish trade and we had a 59.60 bullish trade. This was a complete surprise, but these things sometimes anyway occur in the market, and when you get them, it's really a blessing. So again, this is continuing high. If you're not in the trade, simply don't trade it. We've gone a very long way in FSLR, and it really wouldn't surprise me to see this come back to old support, and then we get the next bounce higher. So FSLR isn't on my list for the week ahead. One share that is Garmin. Garmin looks to be continuing in that bullish trend, as you can see. Have a nice bullish breakout trigger at 55.71, very close to triggering. It looks fairly good. I mean, all of the indicators are very, very nice. We've got good price action. We've got an open bullish gap, which is really good to see. And if I change to the ADX, which is turned up, which is really good, and the CCI is above the signal line. So one thing you want to note before getting into Garmin, if in fact it is on your own trade list and it justifies your own risk management, is of course just where that 10, the 20, and the 50 is. So pay attention. If you are looking to get in, always justify and quantify the risk that you're taking on and just be content with it before you get into the trade. There's nothing worse as a trader than sort of overexposing yourself to one individual trade position and then that trade moving against you, and then all of those negative emotions coming in and sort of wreaking havoc on your own trade sort of psychology. So Garmin is appearing to move bullish, but you have to be a little bit skeptical when it comes to risk reward. Here's LLY. LLY, I believe, is in a nice Bollinger Band squeeze, as you can see. Now, the problem with this is that we're moving in the opposite direction to the trend. You can see we have a nice open window here, which is bullish, and we have a support level at $57. So although I want to place a bearish trade outside that volatility break, I just simply can't do it because I've got too much support and an open window, which is going to act again as support, and this could really whipsaw you before you get that next bullish bounce higher. So at the moment, 60.52 is the trigger on LLY. I'm just sitting tight until it actually triggers. LinkedIn, interesting trade from last week. Triggered, I believe, on Monday, gapped against us on Wednesday, but as you can see, it's starting to fill that bearish move or that bullish gap. So everything appears to be bearish still. We've got that declining 50, which is acting as resistance. We are in a downtrend. You can see we're making a series of lower highs, which is really, really good to see if you're trading in the direction of bearishness or in puts. So again, ultimate targets down here at $184 on LinkedIn, looking like a really nice trade. One trade also which looks to be triggering is Oracle. Now, Oracle came out with earnings, I do believe, during the week. It was a Tuesday or Wednesday, or maybe, I think it was a Wednesday. I think it was this bullish candlestick right here. We didn't get the gap, which we thought we would because we were talking about trading the open window. It didn't actually occur. We had an inside day on Thursday, and then on Friday, we have this very, very strong engulfing Morobozu candlestick breaking that 50. So we're set up here at 37.34 to catch the downside break, down to support about $35 a share or $35.90 a share. So that is definitely a share which looks the goods to the downside. Again, another share which looks to be rolling over is potentially Pepsi. Now, Pepsi has been in this consolidation move sideways, or in other words, a little bit of a channel, a little bit of a funky channel anyway. And we're coming up to these resistance levels and we're starting to roll over. You can see the initial stages of the bearish breakdown. You can see, I mean, you don't want to pay too much attention to the exponentials in a sideways moving market, but you can see our bearish trigger at $80.50. When I change that and really look at the oscillators, they're all overbought and they are potentially starting to roll over, which is really, really interesting. So I am neutral on Pepsi, but I am more so sort of expecting a bearish rollover in this individual stock. Hey, if we break above 83.53, that's all well and good, but my hunch is telling me that 80.50 is a really nice entry on Pepsi. One other share was Solarcity. Now, we were sort of asking ourselves the question, did we want to place a bearish trade down here? Looking back on it, we probably should have, but we didn't, just because of all of these support levels here and definitely this rising trend line. So Solarcity, although it looks incredibly bearish, expect a bounce at this location. If in fact we just completely break down, look for a re-entry about $60.04. Other than that, I'd be leaving this stock for the week ahead. SEE is definitely a bidirectional trade. You can see we've made that sort of upper structure level. We've got a 33.03 bullish entry. Now, let me just see where this, how far this trigger goes back, because I want to move it over just so you can see what I'm looking at. There we go. Let me change to a daily. That's much better, just so you can see this. Move. There we go. So I've got this bullish entry here at $33.03, trading up to 34, even 34.50. That's the ultimate high. If in fact it breaks down below this support level, below this rising bullish trend, we've got the trade set up at $31.11. So I do think this will trigger this week. What direction, I'm not too sure, just like the overall markets at the moment. So keep it on your radar. Keep an eye out. Pardon me, SODA, SODA looks good. It looks like it's in some form of a little bit of a symmetrical triangle. getting very close to the apex, which is good for us as traders. So what I'm going to do is set up a bidirectional trade, one above $44, the other below this swing low down here, about $38 a share. Now, if I change to the Bollinger Bands, you can see that we are almost in a Bollinger Band squeeze. It's not completely full on, but it's telling us that the volatility is low. So we could get a very good move in SOTA this week. I'm definitely keeping an eye on it, because it could be a fantastic trade setup. Finally, we have Target. Now, Target is just simply retracing. It looks to be moving bearish. So what I can do is bring down this bearish trigger. The thing is, though, that the risk reward doesn't really like it. We do have that bullish open window, as you can see, dating back to February, which coincides with this support level, and this is all going to act as support. So although I want to place a bearish trade here, about $59 a share, I'm just not going to do it. And having said that, let me just bring up a new bullish re-entry trigger, and it's going to be located at 61.76 above this old congestion up here. And this could really be what could, pardon me, let me just rephrase that. This could be where the bounce takes place off these exponentials. It may happen, it may not happen, but I'm just not content placing a bearish entry with all this support down here. I'm more so looking at the potential bounce in Target if in fact it does occur. So that was a quick update. We went through 15 shares. If you want to learn how to do this for yourself, come and apply, or simply just register anyway, and you'll get what we call a scholarship. It's a scholarship initiative where we're giving away 8 classes of trade analysis, trade education for free. No gimmicks, no tricks, just honest goodwill to help you obviously move into autonomous trading and also profitable trading, which you all aspire to do. So have a great week, everybody. I'll see you during the week for market updates. Goodbye.